Hi, welcome back to Financial Journey. My name is Cal. So today I want to talk about over-the-counter stocks, more specifically some factors to consider before buying over-the-counter stocks to maximize your profitability. So I'm going to be talking about this from a couple of different viewpoints, whether you are a day trader or you want to be a long-term investor. I'm going to be talking about both. But before I do get into any of that, what I'm going to get you to do is smash the thumbs up. It definitely helps my channel significantly. For those that are new to the channel, I do daily videos on trending stocks, crypto, I do it all. So definitely subscribe. Also, take a look at my Discord, link in the description. It's a free chat that brings individuals together with the common theme of investing, making money, all of that fun jazz. Because at the end of the day, that's what we invest, right? To make money and have fun with it. So definitely join the Discord. It's a good place to be, a lot of good individuals as well. But with all that said, let's get into some over-the-counter stocks. Okay, so just want to start off by going over the fact that over-the-counter is very complex. As you can see right here, this is OTC, lists everything nicely in one area, shows the insiders buying and selling and what the analysts are saying, everything that you need to make a sound decision, roughly. When it comes to over-the-counter, you are not going to get that. You have to search and become a private PI and look on every avenue that you can. So that being said, I'm going to take you through different steps that I typically do when I'm investing. So first and foremost, I like to search this with FinScreener. And obviously, I do use it and sort it based on volume. At the end of the day, the first criteria that I use to single stocks out within over-the-counter is liquidity. So I want volume. I want to be able to buy and sell whenever I want, and relatively easy without having a huge spread and take a loss just based on that. So as you can see, there's 1.15 billion shares being traded for this. And then you can see the average quarterly volume on a daily basis. So choose something that has high liquidity rather than choose something that has one share being traded today. That is very minimal, and you will have difficulty exiting. Not saying you can't sell it, just to sell it at a fast rate and whenever you want, you'll have to take a loss, most likely, because again, there's this bid and the ask, and typically the gap between them is significantly higher on over-the-counter, and that's called the spread. So keep in mind, I'm not a financial advisor, so do your own due diligence at the end of the day. But again, this is steps that I typically do. So first and foremost, check the volume. Volume is what you need and what you want. So if obviously the volume is very significant on a daily basis, but on the quarterly it is down, then you might be worried that potentially it could be a pump and dump. So again, the next steps I kind of go over will hopefully allow you to see what is a pump and dump versus it's not. But what you want is high volume and high relatively quarterly volume. So there's obviously a couple of factors that could be there. The huge amount of outstanding shares could be one aspect. But let's say you do like the RETC, for instance, for argument's sake. Let's say that catches your eye. What you'll want to do is first check the SEC for anything. So you can type in that stock. So basically gives you, I believe it is that one. So all you want to do is go on the SEC website. It'll give you all the 8K, 10Ks, everything that you need to know as far as any filings. So any of their quarterly results. And as you can see right here, the latest filings. So it does look like they are fairly current with their quarterly and annual reports. So what you'll want to do is pretty much just look at this at the end of the day. You are just looking obviously current reports, you'll want to see those. Those are obviously when insiders buy and sell or structural changes. But it just basically is just the company disclosing it. So you want, as far as a company, this is at least fairly good. A good stance is that they are reporting things in a timely manner. That is one aspect that you really want as far as within buying and selling within over-the-counter stocks. Again, I did say at the beginning that I'm going to be talking about two different sides of it. So you'll want to definitely really focus on this when you are buying for the long term. As far as if you are looking to flip and quickly trade a stock and don't really care about it, then you'll just want to worry about the volume. So you'll want to be able to get in and out very fast. You don't care about the technicals. You don't care about anything else. If you're just looking to flip, this is what you basically want to look at, is volume. And I've done that many times. You know nothing about the company, don't even search it, but you buy it. Buy and sell it, and that can be very profitable. Again, that you are riding a wave, and keep in mind, in the wave, you can get hurt many times as well, because at the end of the day, there are people that buy at the top. Keep that in mind. There's people that buy at the top that when the wave goes down, they are stuck holding at the top. So there is obviously pros and cons to doing it that way. If you are looking to invest in a company long term, catch it obviously from the startup essentially. These are some factors that you do. So obviously look at the reporting. If you don't know much about finances, open up the quarterly results, and it does give it kind of a good description of what exactly is being done, and kind of some things that investors should be aware of. So that's what these are for. If, for instance, you don't know finances or that's not your forte, just go on to Yahoo. Obviously, HCMC is one of my favorite over-the-counter stocks, but as far as if you want to go on there, just pretty much Yahoo is very good for that. So just click on financials. Financials, it does lay things out. Keep in mind, though, that over-the-counter is over-the-counter for some reason, and none of them have fairly good finances. If they do, then they would be moving up to the NASDAQ most likely, again, if they meet the criteria, but you'll want to definitely look at this. So yeah, definitely look at their financials if that is your forte. Again, sometimes I like and I invest in a over-the-counter stock long term, and I don't even look at their financials because I know at the end of the day they are relatively bad, and they always will be for the most part. Again, there might be the occasional one or two that is a gold mine that will be very, very good and profitable, but it is what it is. So this is, again, how I do that. So it wouldn't be 2021 if you didn't look at some aspect as far as short data. So you can definitely just go on Fintel at the top there and scroll all the way down. Just look to see how many shares are being shorted. So again, I have HCMC up, one of my favorite ones out there. So you can see that as far as the short data. So right now on a daily basis, it looks like it ranges anywhere from about 20 to 40% on a daily basis of short volume. Whether, again, this is all going to be a lot of personal information, whether you accept that as good or bad. Because again, 2021, especially over-the-counter stocks, a lot can be easily manipulated, and shorts are especially one of those aspects that do manipulate. So it's good to know this information, again, whether you make a sound decision based on that. Me, personally, not. I usually, again, like the liquidity and kind of generally what they do as far as product. So next step is typically looking at the company website. So if it's passed all your criteria as of right now and you like it still, then go on their website. Take a look at it. Do a little bit more research and things like that. So one thing I'll also keep in mind that sometimes they might not necessarily have a website. As bad as that sounds, they might not actually have a working functional website. What you'll want to do is go on their Twitter. See, a lot of companies are obviously on here, basically providing updates, like obviously AITX and things like that. So yeah, at the end of the day, it's AITX is a over-the-counter stock right now that is very kind of on Twitter on the time. They're very active. So yeah, you do definitely have to check out Twitter. And personally, I never used Twitter before buying into over-the-counter stocks or kind of doing that deep dive that needs to be done. So look at that. Okay, so a couple more things. So as you can already kind of tell, there is a lot to be done as far as investing in over-the-counter already thus far. So looking at this, so you can definitely go on to the OTC website, so otcmarkets.com. Again, I have HCMC up. You can see there are different levels of over-the-counter. So there's pink current. Basically means that they are up to date and they provide good, reasonable updates as far as quarterly results, annual results, like everything that needs to be done, they do it in a timely manner. Some things like this. So Chromacure, KKUR. This is an expert market and the dreaded caveat emptor. So as you can see, it says buyer beware. Over-the-counter markets group has determined that there is a public interest concern associated with the company. Then there's dark and defunct, unable to contact. So again, there's these ones that are extremely risky. So even just looking at among the over-the-counters, there's a lot of things to consider, and there's lots of different levels within the over-the-counter that you should be aware of. So if this is one of those ones that has a significant volume on the 1 day basis, and given all the circumstances how it is, and you see, for instance, caveat emptor and various other things, yeah, you can still buy it. I'm sure potentially still flip it, make money, but this is very risky. So again, I'm not a financial advisor. You'd know your own risk factors as far as buying and selling. So a couple more things I do want to talk about. I personally like to look at obviously on here you would see ideally under the SEC website, as far as filings, you would see if a company has done reverse splits or done a lot of share issuances, so dilution. So again, this is more specific and more kind of detailed for longer term investors. So what you'll want to do is, and for those that don't know, this is basically there's reverse splits and stock splits. So more common is stock splits. So stock splits is basically is just splitting kind of the share price, making it more appealing. Whether you're doing a reverse or a regular stock split, it is ultimately trying to bring and allure more individuals, make it more appealing to investors. So as you can see right here, so a reverse stock split divides the existing total quantity of shares by numbers such as 5 or 10. And obviously those are just common. It could be 100, could be 10,000, could be whatever they want. So which would be then called a 1 to 5 or 1 to 10 reverse split respectively. A reverse stock split is also known as a stock consolidation, stock merger, or a share rollback, and is the opposite exercise of a stock split. So basically, at the end of the day, if something is trading at 0.0001 or whatever it might be, and they do a reverse split, let's say 5 to 1, well then now it is currently 0.0005. So it does a 5 to 1 ratio, and their number of outstanding shares goes up by 5. So that's one factor that you should kind of keep in mind when you are also looking at the volume. So let's say there is about 40 billion shares outstanding. Well, then it's reasonable to say that there is a lot of volume on a daily basis that will occur. Again, at the end of the day, that's not anything bad. If you accept that and you're okay with that, then yeah. But keep in mind as well, over-the-counter stocks, like I've already mentioned, many of them are not profitable. So they do need to make it more appealing to investors by doing reverse stock splits, and they do need to dilute their shares. Obviously to pay for various expenses, fixed income, salaries, things like that. To get the business still running, they need to dilute shares. And again, a lot of investors don't like that, especially considering they're just bleeding and might not be profitable for quite some time. So all in all, this is a lot of the criteria that you should be aware of as far as what you're doing. And obviously, that being said, I haven't even looked at the chart once. So that is one factor that you need to kind of look at. But keep in mind, when it comes to over-the-counter stocks, doing technicals and using indicators aren't really always the best option. They can be definitely very beneficial, but at the end of the day, it's basically all this info and what you see it as and where you see the price going. You should honestly, after reviewing everything I just mentioned, you should have a good picture of what you see the chart as. After doing this, definitely look at the chart. Again, you can just use anything, even just basically, just like for instance, just Google HCMC stock. You can do anything you want, and then just look at this, whether it be there or on Yahoo. So again, like I keep going to, I like HCMC, but you can look at the chart. So let's say HCMC met all your criteria, you liked it, and various other things. Well, you look at the 6-month chart. Okay, well, there was a huge increase there. You can refer back to the SEC or Twitter or website to see what could be the cause of that. But for the most part, you're looking at it and say, okay, well, it doesn't look too bad. There's not much kind of big, huge volatility going on. But yeah, and then you can look at the 5-year chart as well, or whatever you need to do. And whenever you do select max under when you are looking at the chart and you see these, that is a huge indication that there was a reverse split. So in roughly about 2013 and possibly in 2010, they might have reverse split it. But that is, like I said, that's the nature of the beast. You are investing in an over-the-counter stock that needs to do this to make it more appealing and to get liquidity in, and especially to pay for, like I said, fixed expenses, salaries, and things like that. But I do like, especially HCMC, that's one of the solid ones. But all in all, when I am making a decision on over-the-counter, these are the factors I consider. But let me know in the comments below what you do and what you use to as far as determine at least a good over-the-counter stock, and what makes you want to buy it versus sell it, what factors you consider. Okay, so let me know your thoughts on over-the-counter stocks and whether you buy them, you avoid them, you flip them. Let me know. If you haven't already, definitely smash a thumbs up and subscribe. I greatly appreciate that. Also, take a look at my Patreon, link in the description below. Lots of good perks for whatever you are interested in. Gets you live updates with whatever I'm buying and selling with stocks, crypto, options, everything. So definitely take a look at it. And plus, you can cancel, sign up. If you don't like it, just cancel. It's free to do so. So yeah, definitely with all that said though, let's make a lot of money on whatever you're investing in over-the-counter.